You're watching The Money Show on ET Now, and in this edition, we're going to be looking at the concept of rebalancing one's portfolio because it's in a ever changing and the dynamic financial market, and it's important to review your portfolio on a regular basis. And you cannot approach this with one size fits all approach. So, what are the factors that you need to be keeping in mind? Let's try and find an answer to that. For this, we are being joined by Rachna Dattani, Associate Director of IIFL Securities, joining us for this interesting discussion. Hi, Rachna. Very good evening, and thank you so much for your time. Firstly, let's start for the benefit of our viewers that what exactly this rebalancing is, because given the market dynamics, the volatile nature, and like the kind of returns that equity market, especially in this particular year, has given, a lot of these viewers have that anxiety that why should I not go ahead and book out my profits in order to have the most of it? So what exactly rebalancing is and how it could help satisfy one's need?
So we just start with the basic question of what is rebalancing of portfolio. Basically, it's just reassessing, inspecting your portfolio of what investments you've done, and is it in line with your financial goals for a long-term perspective. As you see, there's a lot of noise that's there at this point in time, and there's a little bit of FOMO feeling as well, where people are feeling left out with the kind of profits that are made in equity markets. But we also need to understand that this is, this kind of market that we've seen in last 1 year or last 2 years rather post the COVID jump uh, is not the routine. One needs to understand that expecting a CAGR return of 12 to 15% is the most logical way of approaching your investment rather than an expectation of 30-35%, which has happened over a period of last 1 year, which is kind of very different from the what markets have been always. So it's very, very important to understand, analyze your financial goals from a long-term perspective, and review your investments, reflect over what you've done in the past. If there is any correction required, you just redo your portfolio, rebalance it as per your goals.
Rachna, help us understand that why is there need to rebalance their portfolio? Because a lot of investors out there, especially when they are looking to invest in stock markets, they have that mentality that they should go ahead with investments, investing in a good company and then not look at it at all. And that definitely favors a lot of the investors. I'm not saying that having that long-term approach is wrong, but why do you believe that rebalancing one's portfolio is important and that could play a major role in getting the most out of it?
See, so when we talk about direct equity investments, okay, one, having an allocation to equity and debt is equally important. There are times when we've seen negative returns as well in the equity market. The times are changing now. The dynamics, entirely is changing very, very quickly. Previously what used to happen is, we were in globalization, we were not too interconnected. Now, if there is something happening, if there's a war happening elsewhere, the impact does come on the equity market. Just 2 days back, there was a COVID scare due to which the markets corrected. We saw 300-point correction over there. So I'm not saying don't stick to your portfolio, stick to your basic portfolio. There is a tactical allocation also which is required, which needs to be reviewed. Also, if you are very high on equities at one point in time, definitely you need to cut down and review and align it with your long-term goals of investing in gold or investing in debt, because there are times when we've seen negative returns. So aligning your 60 40 or 70-30 equity debt ratio becomes very, very important.
Okay, but since Rachna, you did touch upon the other aspects, like what sort of a allocation should one have? If I may put up the question that when somebody is looking at rebalancing their portfolio, what should be an ideal portfolio looking like? What's your say on that?
So if you ask me, an ideal portfolio should consist of your equity investment, which could be direct equities. It could be your small cases. It could be your mutual funds, PMS, alternate investment funds. When we go to debt, you could have a combination of NCDs. You can have your, you can have your other papers like your GSECs. You can have your SDLs. You can have debt mutual funds. A third category, which not too many people prefer, but I would still suggest it, would be sovereign gold bonds. Okay, one, you're making interest over there, of course, which is taxable. But from a long-term perspective, if you're going to hold on to it, you're not going to pay any capital gain there. So that is also one very interesting allocation, which is a must. I understand for the portfolio. And third is and lastly, your real estate, which should be a part of your portfolio as well.
Okay, Rachna, and let's just touch upon the 3 R's when it comes to the rebalancing. What's your say on that? If there has to be 3 R's for rebalancing, what would those be?
One is review, okay. The second is reflect, and third is redo. Review of your portfolio, either individually or with a portfolio manager, every quarter is a must. It just gives you an idea of where you're heading, where your investments are heading, and are you in alignment with the same. Reflecting upon your mistakes, if there are any which are made, either you've entered a wrong sector, you've entered a wrong stock because somebody just happened to tell you that the stock looks good, and you've made a mistake where the management is not good, you need to correct it. The last is redoing it. So after review, reflect. If you really feel there is any requirement on redoing the portfolio, you definitely need to look at that. Now, when I say redo, you don't really need to look at it every quarter in terms of, I need to make drastic changes on the portfolio every quarter. No, but it's just that if there is a mistake, while you review or you reflect upon it, then there is a change to redo your portfolio at that point.
Okay, Rachna, if somebody is really looking to diversify his or her portfolio at this point in time, then what will be your advice be in terms of making the exposure in different asset classes?
Okay, so I would definitely recommend a portion of it going to sovereign gold bonds, which are on currently. I think they're closing today, but we have the tranches which keep coming by every quarter. Okay, and debt, if somebody is looking at allocating an X amount for 3 to 5 years, there are various entities which are AA, AAA rated papers. We had one IIFL Samasta Finance, which was very, very recently. There are Muthoot entities. So you can look at, depending on the risk appetite, you can look at, a AAA or AA rated paper over there. You can also look at GSECs, okay, which are government securities, or you can also look at corporate FDs, which are there from Mahindra & Mahindra, Bajaj Finance.
Okay, Rachna, with this, we'll let you go on that. Thank you so much for joining us for this discussion on the channel. Great having you.
Thank you. Thank you so much.
Okay, but with this, viewers, it's time to slip into a very short break in this edition of The Money Show. Don't go anywhere. As we come right back, it's time to take all your portfolio-related queries. So stay tuned and start writing to us.